Alright, please can you all see the screen? Confirm you can see the screen. Confirm you can see the screen. Alright, nice one. So alright, so let's pray. Father, we thank you for this privilege you've given to us. Thank you for the gift of life. We thank you for thus far you've helped us. We thank you for wisdom. We thank you for speedy assimilation. We thank you for Friday, Saturday. We thank you for today being the grand finale. Thank you for what you do through us. We thank you because the aim of this training is for us to learn how to trade and to become better people at the end of the day. We pray that this and many more you will help us to achieve in Jesus' name. Amen. Okay, so yesterday we'll look at break of market structure, and we also look at what's it called now? We looked at trending markets, break of market structure, uptrend, downtrend, blah blah blah. Now, there's this other one I have not taught you. I'm going to go through it now so that I'll just quickly go through that one before we now go to change of character. So the one I'll be going through, that's we have bullish or uptrend, we have bearish or downtrend, then we have the last one, which is the consolidated or the ranging markets. We have the consolidated or the ranging markets. Consolidated or ranging markets. So now the consolidated or the ranging markets, this is the way it looks. It looks like this. Please let's pay attention. For the consolidated markets, we have this horizontal line above and below. Now the one below here, we'll call it demand or support. Let's work. So the one below, we'll call it demand, or we call it support. That's for this one that is below here. So we call it demand or support. Then the one above, we call it supply. Supply or resistance. So the one below is called demand, the one above is called resistance. So like I said, this is a consolidated or a ranging market. Consolidated or ranging market. So please let's pay rapt attention to it. So in this market now, you can see this market is neither an uptrend nor a downtrend. So in this market, we have something like this. Come to your part 2. So we have price. You have price moving like this, up, down, up. Can you see? So you have price moving this way. You have price moving like this. Then you can now finally have a breakout, either to the upside or a breakout either to the downside. So now this is a consolidated market. So this is a consolidated market or a ranging market. Now this level is a demand or support level. So at the demand or the support level, are you to buy or you are to sell? Anybody?
You have to sell.
You have to buy.
At the support level,
You have to buy.
That's buy.
you are to
That's buy.
Alright, at this the resistance level or supply, you have to what? You have to sell, correct? So you can see at this demand level here, you want to buy. Because don't forget, at the demand level, whenever you are at the demand level and you are expecting, you are predicting that the price will go up, you want to buy. Whenever you are at the resistance level, you are predicting that the price will drop, you want to sell. Don't forget. So at the demand level, you want to buy. You don't have to cram it, you understand? Demand or support, you buy. Supply or resistance, you sell. You understand? Very simple. So in this market now, you can see that the price is ranging. It means that this is a range. The price is in an enclosed, like an enclosed container. You can see it's going up, down. So the price came to mitigate this level here, this supply level, and see it came down again, mitigated this supply, this demand, broke out a bit, came back, almost got there but didn't get there, came back again. It's just mitigating. Once you get to the supply, it will come down. Once you get to demand, it will go up. This is like a breakout. You understand? It came out again. This is a breakout. Then it came here. It didn't touch this level anyway. It came down. Then you can see that it finally broke out. So you can, once there is a consolidation like this, once there is a consolidation, the consolidation will continue to happen, but it's now going to get to a time. Whenever there is a consolidation, the aim is that after consolidation, price will now expand. So now, after consolidation, it is either the price go up or it goes down. So after consolidation, once the consolidation is over, it is either the price expand upwards or it expands downward. Now, when will you know when the consolidation is over? Understand? That's what's it called now? Another issue that most traders used to have, probably newbie, people that are just coming up. Understand? So they don't know when the consolidation will end, and they don't know when the expansion will be, whether it will expand up or it will go down. But in a consolidated or ranging market, this is what I want you to know. This is the meaning of a consolidated or a ranging market. Price is going up, down, up, down, up, down. You can see it's touching demand, supply, demand. So in a market like this, we advise that traders stay out of the market. Yes, because the reason is you don't want to be, there is no trend. As a trader, look for a trending market, flow with the trend, either an uptrend or downtrend. But the situation whereby you have a market like this, up, down, then we don't want to, what's it called now? So, in the maker, are you raising your hand? So in the market,
Yes, sir.
okay, what's that?
I want to ask that.
No, wait. This is not time for question. I've told you people before, you can't ask question now. Keep your question after the class. Alright, so you can see this market now, see? So this is a ranging market, up, down. You understand? So now, there's something I want you to know here. You can see price started from here, touch this level. came back, touch this level. But you can see that it didn't touch this level like this as it touched this one. This one now, it touched this level and it started coming down. But you can see that this one, when it got here, it came out of this range. It came out a bit, then it started going up. So this is a breakout. The same thing is here to look at it here. Please pay attention. Oh. Don't forget, I'm giving you the foundation. Understand? And you can build on this foundation. This is a breakout. This is a breakout. This is another breakout. But these breakouts now, I call it false breakout. Can somebody tell me the reason why it's a false breakout? False. F-A-L-S-E, false breakout. Can anybody tell me the reason why it's a false breakout? Anybody? If you want to talk, you can unmute your mic and talk. Anybody? Okay, now, this is a false breakout.
Because it's not the final end. It's still, the flow is still continue.
Okay, nice one. So now, you can see that this is a false breakout because I didn't mean this one now that we have here now. This one is a real breakout. You can see. And this one too is a real breakout. But you can see that this one just broke out for a while. Then it went back again inside the range. This one too broke out for a while. Then it came back again. This one too broke out for a while. And it went back again. You understand? So when we talk about most breakouts, if they are final breakouts, they won't come back to the range again. They're just going, whether they are going up or down. So now most of these false breakouts, they are there to deceive you as a trader. Because if you are, okay, let's assume you want to trade this ranging market now. Yeah, at this support, the price went up. Or let's say you've seen the ranging market starting from here, came up, came down. Then you now said, okay, since it's ranging, you want to start from here. So you expect it to go up. Immediately it's going up, you quickly enter your buy from here. And the market gave you money. Since you know that it's a ranging market, you quickly close. And as it's coming down, you enter sell. It gave you money. Bravo. As it's going up again, you already bought from here. Don't forget. You are buying low. You are buying low. You are selling high. You are buying when the price is low. And once the price is high, you want to sell. Some of you, if you have coin now, maybe Solana, Ethereum, Bitcoin, once there is a dip, that's the best time to buy. Because that period, everybody will be afraid. You understand? They'll be afraid. They'll be afraid of the money they have. Some, their money would have gone down. And they don't want the money to disappear. Some will just, let me just sell it. So that's the best time to buy. You just buy and keep. Because it will go up. But when it will go up, you don't know. Now, when it now goes up, you want to sell. So that's what we do in Forex. So you buy low, you sell high. So now, as it's going up, you quickly enter your what? Your buy. You're happy. You understand? You're jumping up. That you are killing the market. You are making money. Now, the thing now got here. You are now waiting for it to get here. As it has happened here and here. You are waiting for it to get here. So that once it start coming down, you enter a what? If it's coming down, what do you enter?
Yourself.
Thank you. So you enter. But we're now waiting. You were waiting. The thing now got here. It now came out of this, your range that you have marked. It's now going up. Now, as it's going up now, you might feel that, this buy still want to continue. Or you might have that feeling that, okay, the market has now broken out. Understand? You know, the price was ranging before. But now you might feel that, okay, this is now the final breakout. Understand? Let's now assume you close your position around here. And the thing got here. It didn't give you any sell indication or any sell notification. It just continue going out. You're not like, this market has finally broken out. So as it's breaking out like this, you know what most traders do? They'll just quickly come and enter their buy here. Yes, plenty of them. They'll come and enter buy here, thinking that the price has finally break out. Understand? They will enter the buy here. Some will enter. Some will enter late. Some will enter early. Like this one now. This one is early buy. This one too is a bit early. This one is late buy. In fact, this one is very late. So now, the market movers now, they are working on the market now already, because this is a first breakout, and they intentionally pump a lot of money here to continue to buy, so that a lot of buyers will now a lot of traders will now think that this is the final breakout, whereas this is a first breakout. So you can see the buy will give you small money for some time, then this thing will start coming down, and as the thing start coming down, it will take out all these buys. Are you getting it? So that's why it is a first breakout, and that's the same explanation for this one too. Now, if it's coming down again, normally it's supposed to get to this level here, then go up as usual, since it's a consolidated market. But you can see it got here, it now broke out of this level, it's now going down. So a lot of traders will be like, oh, this is now the final breakout. Then they will start to what? To enter sell. They will start to enter sell. Some will enter early. Some will enter very late. And the market will just sell for some time, give you small money. Then it will reverse back and clear all the sell. Will take out all your stop losses. So that's why all these ones, they are first breakouts. Now the final breakout is this one here. The final breakout. Coming. The final breakout or the true breakout. Let me use true breakout. Abi? I'm just giving it name. You won't see it in any Facebook. Whatever any trader wants to call it, you can call it. So that's what I'm calling. So this is a true breakout. You can see this is a true breakout. So now the true breakout can either move up or down. So for instance now, if this true, it can either move up or down. So there's something we call break and retest. It's a strategy that people use to trade too. So if it's moving up, you can see it just go up. Then once it's going up like this, don't come and enter don't come and enter here. It's late. Don't enter here. I'm giving you code now. Don't enter here. It's late. Don't enter here. It's late. The best place you would have entered would have been around this place. This one is early. This one too is early. But once it has gotten up like this, don't start entering here. It's late. Now it has given you a push. After a push, what do we have in an uptrend? After an impulsive move, what's the next thing? Oh yeah.
Retracement.
Thank you. So after after an impulsive move, it will now retrace. So as it's retracing now, all of you that have entered here, all this here, it will take you out. Take out your stop losses. That's why you don't enter late. Once a market has gone far, don't even enter again. If you still want to enter, wait for it to retrace first. So you can see that it can retrace, in fact, it can retrace to this place, the opening, then before it will now start going up again. So if you have waited patiently, it will come. So all these people that enter here, all the people that entered here, even here, you can see it started retracing. So it will take all of them out. It will take all of them out. Then before it will now start going up. So once you have something like this now, that means that this thing is breaking. It has broken. There's a break of structure here now. You see that there's a break of structure here. Yes, this was the former high now. Now we now have a new impulsive high that has taken out this high. Do we understand? Do we get it? So you wait for a pullback. You wait for a pullback before you now take your buy. So you can now take your buy around this place. Now, the pullback may not get down here. The pullback may even get here. It may just be 50% Fibonacci retracement. It may even get, it may be half. It may even come down. It may get here. You understand? So it depends. Although there are different types of pullback, but this class is not for that. So, but if it wants to break out down, that's the same thing too. Once it has break down like this, once it has break out like this, don't come and start selling here. It's risky. It's risky. You don't sell at this price. You don't sell at this price, you understand? If you wanted to say, you would have sell at this place. These ones are early entry, but these ones are late, because after an impulsive, what are we expecting here now for a downtrend? Yeah, somebody should tell me. Impulse and what?
Retracement.
Thank you, retracement. Is there only one person that is answering? So you have retracement. So the retracement can either get here, maybe 50%, or you can get here too, or you can even come to the entry back then before you start going. And once the retracement get back, and we now have another impulse. We now have another impulse that took out this recent low. Then what do we have here? What do we have here? Okay, answer me now.
Break of structure.
Thank you. We have break of structure. So, and that is to let you know that we are now having a downtrend. That means this thing has broken out from the consolidated market, and we are now having a downtrend. As simple as that. Understand? So let's quickly go to the chart. Let me look for example of a consolidated trend for you. Let me look for an example. Now, this is good. Let me see. Let me look for an example of a consolidated trend. Now, you people can identify uptrend and downtrend. So, you should also be able to identify a consolidated trend. Look at this one now. This is an example of a consolidated trend. Look at this. So, if you want to identify, once you see anything like this, you can just come to your trend line. You pick the up, you also pick the down. Can you see? So this is a good example of a consolidated trend. Let me zoom it so that you can see it. So this is an example of a consolidated trend. You can see price touch this place, came down, went up, came down. You can see that some is not even coming down. So went up, came down, almost touched this support, then went up, broke out of this, you can see, then came down. This one got here, bounced back. You can see that this one broke out of the range. You can see. Then look at this. Then look at this one now. So what type of this thing is this one? Breakout is this.
A false breakout.
You can see. Now this breakout now would have deceived a lot of traders, because they would have thought that that's the final breakout. You understand? So that breakout now would have deceived a lot of traders. I should go on to access. Where is your, where now? So that breakout now would have deceived a lot of traders. You can see these people that are just joining. They are wasting our time. So that's why as a trader you have to be very patient. Where is it? Okay, so you can see this is the first breakout now. Thank God I didn't even have this example when I was explaining. So you can see that, yeah, this thing is expected to get, you can see that this one now, this low now didn't get here. This one too didn't get here. This one too didn't get here. But normally this one got here, but now broke out. So a lot of traders now, they would have said, oh, well, sell. They would have started selling from here, selling from here, selling from here. Some will even come and sell from here. then you can see the retracement. And as it's retracing like this, it's clearing all this sell up. We take their stop loss. So you can see that it now came up. Then this is now the final breakout. Can you see? Can you see that this is the final breakout? Can see.
Yeah.
So this is now the final breakout. Can you see? After it has deceived a lot of people here. You understand? So this is an example. I don't want to take more than this because I have other things I want to do today, so that I can be able to wrap up. Okay, so we are done with that, and then I'm coming on. Let me quickly walk you through currency pair. Now this is currency pair. And see the time that people are just joining. People are just joining by this time. Hi Shats, welcome. So we can start now because we have been waiting for you since. Hi Shats.
Good evening, sir.
Yes, ma'am. Good night, though. We have been waiting for you. So let's start. Aishat is around. Let's start class. Alright, so let's quickly do currency pairs. So we have currency pair here. Okay, let me use word to explain to you. We have the base and the quotes. Please, are you there? Can you hear me?
Yes, sir.
Good. So we are finishing by 11. It's even good. We don't have a lot of people here today. So, okay. I think we are 18 on this call. Wow. I was not even expecting. Are we 18? Many are called, but few are chosen, like the Bible says. So, out of how many people on the group? That's when you will know.
Screen.
You say what?
I can no longer see your screen. Okay, it's back now.
Mute yourself. Alright, so let me quickly explain currency pair. So for the currency pair, when we say currency pair, I told you to check currency pairs for me, 20 and send. So let's say we have Euro USD. Pay attention now. So currency pair is a combination of two currencies from different countries. Let's say we have GBP, USD. Let's say we have Euro JPY. So we have Euro and USD. So Euro now, let's color Euro as yellow. Let's color USD as let's use another color. Let's say blue. So Euro is the base currency. USD is the quote currency or the counter currency. Euro is the base currency. USD is the quote or counter currency. And that's the same thing that applies to this one too, and every other thing. So a currency pair comprises two currencies of two different countries. So you have the Euro and you also have the USD. Euro, EUR, USD, United States dollars. GBP is Great Britain pounds. Then the Great Britain pounds versus United States dollars. You also have the Euro against the Japanese yen. Understand? So you have other currencies too like that. Who can tell me the full meaning of this? Okay. Alright, so now this currency now, this one is the first, this one is the second. So this one is the base, this one is the quote. Euro is the first one is the base, the second one is the quote. So when they say currency pair, is a combination of two currencies. So now any currency that has USD with it is called a what? A major currency. Any currency that has USDT with it. USD is called a major currency. So we can see Abi.
Yes, sir.
Alright. So any currency that has USDT with it is called a major currency. Anyone that has that doesn't have USD with it, they call them minor currency. Minor. And the reason is because they don't have USD with them. Understand? But the ones that have USD with them, they are called major. This one to NZD card is a minor currency. CAD is Canadian dollar. NZD is New Zealand dollar. You understand? So we have a major currency, minor currency. So now let's go back to the chart. Let me explain this to you. Let's say we are on this currency now. Now this, what currency is this? Anybody? Is here? Is it here? What currency is that?
Great Britain pounds and
Australian dollar.
Thank you. So now this currency now, if you are on the market, if you are on the chart now, and you want to take a trade, now this was where the market closed on Friday, and this is where the market will open today, this night. So now let's assume from your analysis now, let me go to 4 hour now. Let's assume that we are expecting that price will come down, so we want to sell. Understand? Or let's use buy first as example. Let's assume we are expecting that the price will go up. So if we are expecting the price will go up, are we going to buy or we are going to sell?
We'll buy.
We'll buy. So if you want to buy GBP AUD now, what you are trying to say is that you are expecting that GBP, which is Great Britain pounds, it will gain more power, it will gain more strength, while AUD, which is Australian dollar, will become weaker. If you are buying GBP AUD, you are saying that GBP will gain more strength. You are predicting that GBP as a currency will gain more strength, while AUD will become weaker. But if you are predicting that you want to sell GBP AUD, the reverse will now be the case. That means you're now saying that GBP, which is Great Britain pounds, will get weaker in strength, while AUD will gain more strength. Do you understand? Or I should come again? Let me come again. So if you are buying a currency pair, you are saying that the base currency will get strengthened, while the quote currency will get weaker. If you are buying any currency pair, you are saying that the base currency, which is GBP AUD, will get stronger. For instance, now you are buying Euro USD. If you are buying Euro USD, you are simply predicting that Euro will gain more power, that while USD will become weaker. And if you now want to sell, you just reverse it. Euro will become weaker, USD will gain more power. That is, I think that is not hard to get. Do we understand that?
Yes, sir.
Alright. So please don't forget that. Don't forget that. Okay, so I think we are done with even that currency pair now. Wait, what other thing did I say we'll do? Let me check the message I sent to you. Please check the message I sent to you. That message I sent you that I said we'll do this and this and this. What other thing did I add to the message that I will teach you again? WhatsApp message now. Okay, yeah.
change of characters.
Okay. Thank you.
Trading
Change of character and what?
Trading dictionary.
Okay.
Forex dictionary.
Alright, thank you.
Key trading terminologies.
Okay, so but before I move on, hope you understand this base and quote currency pair, Abi. Alright, can you hear me?
Yes, sir.
Yes.
Okay, so now for this change of character, it's a very sweet topic. So, and I want us to listen. Don't forget we are closing by 11, so we have time to ask questions, but I want to drive it down. Like I said, this is our last class and it's foundation for us. So this foundation I'm giving to you, you can build on it for sure. You understand? So this is the foundation, but just make sure you get it right from this foundation. Now let me use NZUSD. Alright, please can you still see my screen? Is it clear enough?
Yes, sir.
Alright, so now yesterday we looked at break of structure. This is an uptrend. This is a downtrend. Some of you that use phone for the assignment today, I know that phone is going to give you tough time. Okay, so now this is an uptrend, this is a downtrend. Like I said yesterday, this is the lows, higher lows. These are the higher lows. These are the higher lows. Please pay attention. Understand? These are the higher lows. Now, these ones are the higher high. What did I say about higher highs? Yes, the higher highs are what?
They are weak.
Thank you. They are weak highs, and they will be taken out. You can see that all these highs now, they have been taken out. They have been taken out already. Break of structure. They have been taken out already. Now, in an uptrend, don't forget that the lows sustains the trend. Now this lows now is the one sustaining this trend, and this low must not be taken out. Understand? And that's why you can see that the highs are taken out in an uptrend. See that they took the highs out, but the lows is still intact. So you can see highs, lows, high, low, high, low, high, low. But imagine we now have this one coming down. This one stop here. The trend is still uptrend. But let's now assume this one got here and now started coming down. This one now took out this last low here. So once this low has been taken out, now these lows, they are protected lows. So in an uptrend, the lows must not be taken out. The lows sustain the trend and they are protected lows. But now imagine the price now got here and now started coming down, because normally it's supposed to form something like this and then do this for the uptrend to come. But imagine it now got here, it now did something like this, it now come down, it now started coming down. Now as it's coming down, it now took out this low here, this last low. So once we have something like this now, since this last low has been taken out, what we used to call it is change of character, which is the CHOCH. We call it change of character, or some people might want to call it MSS, market structural shifts. This MSS is not popular. The one that is popular is the change of character. So you have the change of character, or MSS. So this is what you have here. So because of the space, let me just use CHOCH. So let me use, what's happening? Who is this person? By this time. So let me use CHOCH. CHOCH. Can you see? So now, because this low has been taken out now, this is now change of character. Now, what does change of character means? There was a former character that was giving us uptrend, and the low must not be taken. Now the last low now has now been taken out, and since the last low has been taken out, is now telling us that it seems that this leg is finished. Now we are now having a change of character, that this former character, which is an uptrend, is done. Then the market now wants to start selling. That's the meaning of this. So most times it will come down, take this out, then it will go up like a retracement, then start going down again. Then it's now start forming something like this. So this is what we call a change of character. That means from an uptrend to a what? To a downtrend. So from an uptrend to a what? To a downtrend. So this is now a change of character. So don't forget, this was the last low, and like I said, in an uptrend, the low must be protected. You understand? But now this last low now has now been taken out. Okay, once it's 5 minutes to the call, please let me know so that I can create a new link for us so that we can join. Alright, so you can see that this last low now is not supposed to be taken out, but now price has taken it out. Since price has not taken it out, then we should now be expecting that there might be a change of trend. Although when it comes to the advanced level, a change of character does not, or once a last low is taken out, it doesn't always mean that the trend will change. You understand? Okay, thank you, Loco. Thank you. So whenever there's a change of character like this, normally this is the way people will teach you. But when you start trading, you see that there will be a change of character like this, and yet the market will still do something like this. You can see there will be a change of character like this in such a way that this low will be taken out. In fact, the market can ever come down to take this second low too. You can take out this first low, this last low, take out this one, then it will now start going up and come and break this structure. Yes, I'm just showing you this thing so that once you start seeing it on the chart, you won't be surprised. I'm teaching you in advance. Understand? So you can see those things. The market will do something like this. It will come down and take out this. It can even come again and take out this, and it will start going up again and still come and break this structure. Because some people would have thought that okay, the sale wants to begin. So it can just come down for a while, then continue going up. So you should be expecting this too on the chart. Are you getting it? Are you getting it?
Yes, sir.
I need us to respond. Are we getting it, please?
Yes, sir.
So now, this is one leg. This is for option. Now, look at this downtrend now. In a downtrend now, this is a push, a pullback, a push, a pullback, a push, a pullback, a push. So in a downtrend now, these eyes are protected eyes. Please mute your mic. Who is that person? Emeka, please, can you mute your mic? So these eyes now, in a downtrend, they are protected eyes. They are protected eyes. They must not be taken out. Or especially the last eye. The last eye now. It mustn't be taken out. Now, all these lows now, what type of lows are they? Anybody that wants to help me?
Weak lows.
Thank you. All these lows now are weak lows, and you can see that they've taken them out. This one, this impulsive has taken this low. They are weak lows. So those weak lows, they are taken out already. Weak lows, take out, take out, take out. But all these ones, they are strong eyes. They shouldn't be taken out. So imagine we have a downtrend like this. A downtrend like this. Then we now have price do something like this. Price now started going up. Started going up. It now took out this one. It took out this last eye. So once it takes out this eye, people will start having a feeling that it seems this sell is done. We now want to start what? We want to start a buy. since the sell is done and we want to start a buy. So once the last high is being taken out and you have a retracement like this, so if the retracement doesn't come to take out this last low, if the retracement does something like this, came back, or maybe get to the middle or 50%, or you get to any of this place but you didn't take out this, if he gets here and he now start going up to the extent that he now took out this high, that means there's now a change of character here. That means we are now having an uptrend. Do we understand? Do we understand?
Yes, sir.
Or should I explain this part again?
Yes, sir.
Please do.
Alright. So now, this is a downtrend. Please pay attention. Let me take my time. This is a downtrend. In a downtrend, these are weak lows and they have to be taken out. All these lows are weak lows. Now in a downtrend, these are the highs. These highs, they are protected highs. Now the last high must not be taken out, just as the way we have it here. So this place now, this last low now was taken out and we started having a change of character. So look at this now. These are the highs, but this last one must not be taken out. Yes, but you can see that the price now came to take it out, and immediately price took it out. Price are taking it out now, and once price are taking it out, it's actually signaling something to us. It's telling us something. What it's telling us is that there might be a change of character from the downtrend to the uptrend. So now, how will you now know? You now wait patiently, see how price will react. So the first thing you want to look out for, if price now take out this high, now comes back and get to maybe 50%, 60 or 70, and now start going up again to take out this high it has created, that means the trend has now really changed to an uptrend. Now this is the first what's it called now? What name will I even call it? The first part. If price does this, that means the trend has really changed. Now the second thing that price might want to do is that if price now does this, took out this high and even come again and took out this high again, then now start going down and now took out this last low, that means that there was no change of character. You understand? That means there was no change of character here. So price just went up to clear all these lows and continue going down. You understand? So that means that the sell is still valid. Do we understand?
Yes, sir.
Have we gotten it now? So see, the reason why I'm giving you this scenario is that when you pay for mentorship and people are teaching you all this, they will not go deep into this thing. You are the one that will be experiencing it yourself on the charts. And you might be like, but this person did not go deep like this. So me, I'm going very deep for you now, and that's why it's not really clear. So if I've done something like this, let me explain something to you now. This one will be simpler for you, and you will just get it. And these are the normal stuff that other people know. Understand? So now imagine we have a downtrend. So when they want to explain change of character, just say once this last low is taken out, just wait for a pullback. Or what I would just say is that once this price just pull back and it takes out this last high which is protected, just wait for it to retrace back to 50% Fibonacci or 61 or 78. Then as it's going up, you enter your buy around this place. That's what they will tell you. This is what the normal tutors will teach you. But me, I'm already giving you scenarios that even when you have something like this, it doesn't mean that there's a change of character. Market can be so crazy that it will give you something like this, and yet it will not continue to go down again and now come and clear all these things. Whereas you have thought that a buy want to start or an uptrend want to start. Do we understand?
Yes, sir.
Please, how many people answer? Just 2. Please hope we are not sleeping on this call.
No, sir.
I answered 2.
Alright.
Answer.
So we have 6 minutes more. Let's quickly migrate. So I'll send the please just hold on. So I'll send the link now to us. Alright, please can you all see the screen? Can we all see the screen?
Yes, sir. Yes, sir.
Alright, so currency pairs, change of character, Forex dictionary. Okay, let's do Forex dictionary. Then we can go to how to enter trade. We might even finish before 11 safe. So these are Forex dictionary. They are just terminologies that I'm going to be explaining to you. There are terminologies that I'll be explaining to you. Number 1, we have pips. I don't want to go into the calculation now. We have pips and we have pipettes. Okay, now no, I don't want to go into the calculation of this one. Let's start from spread. I want someone to read from me spread. Hold on. Okay, so let's start from spread. So spread is just the difference between the bid price and the ask price of a currency pair that is set by a broker. Please can you all see the screen?
Yes, sir.
Hope you are not sleeping, no. Yeah. Spread is the difference between the bid price and the ask price of a currency pair that is set by a broker. I'm coming. So we have the bid price, we have the ask price. The bid price and the ask price is the difference between the buying price and the selling price. You can see the bid price is the selling price, the ask price is the buying price. The bid price is the selling price, the ask price is the buying price. Now the market is not open currently, I would have showed us something. Let me see if we can have BTC. Okay, BTC should be open. Okay, so BTC is open now. Can you see the screen?
Yes, sir. Yes, sir.
So now, I'm trying to zoom this thing. This BTC now that is even open. There are two lines most times. Can you see an horizontal line here? Like a red line here that is moving. Can you see that this thing is moving? If you look closely, you see that this candle is moving. Look at this candle, this last candle. Can you see that it's moving ahead? So there are two lines there, but it's one that is more visible, like a green line and a red line. So the difference between the two lines is what we call spread. That's why whenever you enter a trade, most times your trade will be minus first before it will turn to green. Once you enter a trade, it will be on red first before it will now change to green in case it is going your way. So the reason being that is that spread is just like a commission that your broker is collecting from you as a trader. Now I asked you to check the different type of brokers that we have. We have Exness, HSF, HFM, we have OctaFS and the likes. So now you might want to ask yourself, how does this broker make their money? One of the ways through which they make their money is from spread. Now what do we mean by spread? Spread is the difference between the buying price and the selling price. You understand? For instance, now all of us, we have bank, and those banks, they charge us commission. You understand? So at the end of the month you are going to receive a lot, maybe for bank charges. Now there are even some charges that you get within the week too, and those are ways through which banks make their money, and that is also the way through which the brokers too, they make their money. So they are charging you spread for every trade that you open, and that's why a broker will always want you to open trade. They always want you to be trading every time, and the reason is not because they like you. The reason is because so that they can make more money from you, because they know that 95% of traders cannot trade, and that's why we also have prop firms too. Understand? So they are doing that because they know that a lot of you cannot trade, and they want to take advantage of it. So, and the more time you enter a trade, the more commission they make. You understand? And also the higher your lot size too. So spread just means the difference between the bid and the ask price of a currency pair that is set by a broker. Now what do we mean by bid and ask price? Bid price means the selling price, ask price means the buying price. Bid price means the selling price, ask price means the buying price. I would have showed you what I'm talking about, but I'm coming. Let me see. This BTC now is not really showing me what I want to see. Let me see Ethereum. I'm coming now. The two prices I'm looking for. Let me go to 5 minutes time frame. It's not really showing what I want. So because the difference between the bid and the ask price is that spread. Understand? Is that spread. So just take that definition as it is. I didn't mean the major currency pairs. I didn't mean the market is open ahead. You will see what I'm trying to say on the major currency pair. I'm not getting it yet. Understand? Now we have what is called leverage. What do you mean by leverage? Leverage just means, as the English word implies, leverage. And let's assume, how will I say it now? Leverage just means assistance. You are in a business, and the business, you make, the valuation of your business is like 1 million, and you make a profit of 100k every month. So somebody might want to give you more money, so that instead of making 100k, you start making maybe 500k or 1 million per month. You know, because your total valuation of your business is 1 million, you can only make 100k per month. But if somebody now gives you more money and your total valuation is 10 million, how much will you now be making per month? Can somebody answer that? Thank you. 1 million. Correct. 1 million. So leverage just means that you have small money and you are making small profits. But if somebody gives you more money, you can make more profit. That's why once you become profitable, once you get the correct strategy that can make you money in Forex, start looking for big money. Yes. So if you start by using $50, $100, $200, and you have been trading for months, for weeks, for years, once you now have a strategy that you are very sure that, okay, out of 10 trades you can win like 7 or 6, and you have tested it for like months, start looking for how to leverage your account. Start looking for even people that can invest in you, that you can trade for, or you can go and buy a profit. Understand? So that, because when you now leverage, then you now be making more money. Because you can't be a good trader and you are trading with $100, $200. What before you will grow, it will take years, it will take time. And that is what all these big guys used to do. Jeffrey Benson, Abel Forex, Dapo Willis. When they started, they were trading with small money. But immediately they became good, and they have a strategy that is working. Maybe out of 10 times, it will work 6 times or 7 times. They started looking for people that will invest in them, and from there they started making big money. Understand? So leverage just means that. So now when it comes to Forex now, there are brokers that will give you leverage. If you deposit $100 now, a broker can give you a leverage in such a way that you can use that $100 to enter multiple trades on the chart. You understand? You can use that $10 to enter multiple trades on the chart. You can use that $10 to enter multiple trades on the chart if you are trading without $100. So the broker will give you leverage. Now, okay, with this $100, you can use it to enter more. Because normally that $100 now, probably you are supposed to be able to enter just 2 positions. Now, what do you mean by positions in the market? Let me show you the meaning of what I'm saying. I'm coming up. Let me show you something here. Not this place. So I want to show you the meaning of positions. Okay, look at this. Can we see this? Can we see this clearly? Can we see this clearly? All right. So now, if you look at this chart, there have been this is MT5. You can see that you have your codes, your chart, your trade, your history, your messages. So now if you look at this now, this is where we have positions written here. Now this first one now is a position, this second one is another position, this third one is another position, this fourth one is another position, this fifth one is another position, and the sixth one is another position. So if I ask you now, how many positions do we have here? How many will you tell me that we have? Then we have 6 positions. Please give me 1 minute. Okay, so you can see we have 6 positions here now. You can see we have 6 positions, and the balance here is $10,000. So now let's assume this $10,000 now on the norms. You are not expected to be able to open more than 2 positions. But what your broker will do is that your broker will now add more money to your money. That's just the meaning of leverage. Your broker will give you more money in such a way that you will now be able to open a lot of positions with your small amount of money. You understand? And the reason why your broker is adding that amount of money to you, is giving leverage, is not because the broker likes you. It's just because he wants you to be able to open a lot of positions. Yes. Understand? So that if it doesn't go your way, you know. And don't forget that the more money, the more what is it called? Let me put it this way. The more position you open, the more commission the broker makes. The more positions you open, the more commission the broker is going to make from you. Understand? So, and the more time you trade on the chart, the more commission the broker too is going to make. So a broker always wants you to deposit and trade and use all your money, because most broker knows that most traders cannot trade. Understand? So they want to take advantage of that. So now leverage just means that you have $10 or $100, but your broker is adding more money for you so that you can open a lot of positions. Now if you now open a lot of positions and you are now taking trade, let's say you took the first trade and you enter like 6 positions and the trade went your way, you will make more money, unlike when you enter just 1 position. Understand? But now if you now enter the 5 or 6 position and it doesn't go your way, you will lose more money. So you can see the advantage and the disadvantage of leverage. Are you getting it? So leverage can be an advantage, it can also be a disadvantage. The advantage is that you are using the small money that you put in as capital to make more money. That is if the market goes your way. But what if it doesn't go your way? That means you will lose more money. Do we understand? Do we understand?
Yes.
So that's just the meaning of, that's just the simple meaning of leverage. Understand? Now we have the free margin here. Free margin just means balance minus margin. I'm coming. Let me still check what we have here. Balance, your balance minus margin will give you your free margin. So our balance here is how much? Oh yeah, now so we can see the $10,000. Our balance minus margin will give. So your margin is how much here? Fast. So when you subtract it, you will get your free margin of $9,845. Understand? That's that. Then the other one we have here is okay, margin call. Now margin call just means when you blow your account. That's the simple definition. Understand? When you blow your account. In fact, the first time I experienced that, you know, somebody was, I paid for a robot account and the guy was trading for me. I was just looking at the results. So while the guy was trading for me too, I now decided to take some trade. I went to trade gold that day, and then I didn't know anything about news, and the market was volatile. I think there was NFP that day, and I now even went to enter against the trend. So I was working at work. I entered the trade. I was looking at it. So I just went to do something. Before I came back, everything has cleared. What happened? I now chatted with the guy that I didn't see anything on my chart. The guy now said I have blown the account. So my intention was, okay, if I now look for another money to put, the former money that is there will still be there. The guy now say no. The guy now say, I know that one is gone. Oh, I have to put new money. Understand? So that was the first time I was going to experience that an account was being blown. That was when I said, oh, so this is the meaning when they say somebody has blown account. So margin call, that's the meaning of margin call in simple terms. Understand? Your account is gone, the money is gone. Understand? So the broker will close all your position for you. Understand? Yes. Now don't forget that once you deposit, the broker will give you some money. But once it's now getting to say whereby your account is getting to you're already having minus and you are almost blowing your account, or you want to blow your account, or once you now blow the account, the broker will make sure that you don't touch his own money. He will close all your own position for you, while his own money will still be intact. So once that happens like that, what you now need to do is that you now need to go and deposit a new money and trade again. And if you blow that one too, you have to go and deposit a new money again and trade again. Although those money that you are blowing is either going to your broker or is going straight into the market. Now there are two types of broker, although I'm not going to explain that to you. That one is for my mentorship class. Understand? So that one is not free of charge. So now that is that for margin call. Now the next one is the types of charts that we have. So we have the line, the bar chart, and the candlestick chart. Let me show you that on the trading view. I told you to come along with your trading view. So this is my own trading view. So look at the charts. Now all these things that you have now, these things, they are called candlestick. They are called candlestick. There's a topic I have in my book, candlestick patterns. Candlestick pattern. So they are called candlestick. Let me show you. This is it. This candlestick pattern, where I used to teach my students everything, all the different type of candlesticks and the meaning on the chart, so that once you come across them, you know what to do. Understand? Don't joke with mentorship. All these ones I'm giving you, they are just 5%. The win 95% is not free. But don't worry, these are just foundations. You can go and build on it. Understand? And if you now say you want the real mentorship, you can chat me up and send me a message on my DM. You can talk more. So now, so where were we? We are looking at types of charts. So we have line, bar, and candlestick. So now these are candlesticks. These are the candlesticks. So if you want to change it to come here, you can see, you click here. This is bar. If you want to change to bar, you click on the bar. And see that I've changed it to bar. See the way the bar is looking. This is a bar. Now I can also change it to line. This is the line chart. Can you see? It's a line chart. There are some traders that they, instead of using candlestick, they'll make use of the line chart. Then you can change it to candlestick bar. You understand? So it depends on, but the most popular one is the candlestick, which is this, the candlestick. So those are the types of bars that we have. Then we also have the other one. What is it called now? Okay, we have types. We have wick. We have wick. So what do you mean by wick? Wick just means that when price has rejected a particular level. For instance, now look at wick means rejection of price. Look at what you have here now. This is a wick. This one here is a wick. This one too is a wick. You can either be above or below the candlestick. This is a wick up, this is a wick too. So this thin line now, this is a wick, this is a wick, this is a wick. They are called wick. Now it's telling you that price is telling you where price has gotten to before the market rejected the price. For instance, now this is a candlestick. This is a green candlestick. Now we have the wick here now. We have the wick. at this level. We have the wick here and see. So what this one now is telling us is that this candlestick, this green candlestick now, it has gotten to this level before, but it got rejected. It now came down back. Are you getting it? Are you getting it?
Yes, sir.
Exactly. So it has gotten here before, it now came back. So that is what we call wick. So this tiny, like all this tiny stuff now, these are what we call wick rejection. So it's telling you that price has gotten to a place. If you were not on the chart now, like now, we were not on the chart that when this thing happened, but we can come back and be able to interpret that, okay, oh, that means this was the highest point that price got to before we had a rejection. So that's the meaning of wick. So you can either be up or you can either be below. You can see this one now. If you want to bring it below now, look at this wick here. This wick here now, look at this one here. So this one is telling you that, and it's very simple. You can see. So what this one now is telling is that price got to this place before it started going up back. You can see the price got to this level here, got rejected, then it started going up. So that's the meaning of the wick rejection. I'm tired already. I think this is where this is where we are going to end this class. I think I told you I was going to teach you how to enter trades. Do we know how to enter trade?
No, sir. No, sir.
Okay, are you the only one that don't know how to enter trade?
Yes, sir.
Okay, so let's go to our MT5. Everybody open your MT5 fast. Once you are there, just unmute your mic and say I'm there. Yeah. This,
I'm there.
you are there. Are you the only one?
I'm there.
Okay. We are there already, Abby.
Yes, sir.
Okay, please hold on. So go to where you have trade. I expect that you should have money in the account too.
Yes, sir.
Alright. So I don't know if the market has opened though. Wait, let me check. Let me check the normal currency pair. Okay, the market has not opened yet. Okay, let's go to I want us to choose Bitcoin, because Bitcoin is BTC. Go to your MT5. Oh, come in. Right. Go to your MT5. Hey,
I'm there.
come in now. Go to quote. This place. What currency pairs you have there?
I'm having USD RUB, USD AUD, USD AMD.
Okay. Go to the top. You should see a cross at the top by the right hand side.
Yes.
Click on that cross. Please, are we following? I want us to go and change. But you are not having any BTC USD there, Abi?
Yes, sir.
Okay, click on that cross. What came out? Click on that cross first. You say what? Once you click on that cross, then there's a place where you can type a currency pair there.
What is showing is
Forex
Forex indicator and standard.
indicator, Forex standard.
Forex indicator standard.
Okay, screenshot what you have and send to me. Send it to my DM. Fast. Anybody. Screenshot and send to my DM now.
No. I've sent it. I have added my
Okay, somebody have added Abi. So what did you click on?
I clicked on the cross, then I typed BTC.
And that's what I'm saying. Once you click on the cross, there's a place where you can type there. Check it well.
Yeah, I've done that, sir.
Eh?
I've done that, sir.
Has it come out?
Yes, sir.
Okay, so you make Alpha. Have you done yours? Who else is having the challenge? Eh?
Mine is not showing it.
It's not showing it.
I'm not seeing it. Click the plus button.
Click the plus button under quote. Click on quote first. Then you now click it.
What my code showed. What my code showed. I typed BTC USD. But it showed BTC USD.
BTC USD. Any BTC, just click it.
Alright.
Yes. Now this one is sent to me. Eh?
I typed
So are we good now? Are we good? Are we all good?
click on that so that it is like edit. Then like this. Click on it and search it. It is USD. It is USD.
Okay, look at what I have on my screen now. So where you're having this fine symbol coming, these fine symbols now, that's where you click on. Then you can type whatever currency pair you want to appear. Can we all see it? So are we on? Have we all typed BTC now? Do we now have BTC? BTC USD. Eh?
Yes.
How many of us doesn't have BTC USD? Let me know. Or how many of us have not gotten it? Have we all gotten it?
No. It's not showing. Like I want is when you click that cross.
Once you click the code, it will bring you here. You will see symbol, add symbol.
And person.
Do you have the MT5 in the maker?
I've seen BTC there. I just click on it.
BTC USD, just click on it. Once you click on it, it will automatically appear under the currency pairs. Then you can now go back and check.
Okay.
Oh yeah, so let's now go back to our code and then go and click on BTC. Oh yeah, everybody do that now, there's no time. Emeka? Eh?
Should we click it as new order? Okay.
Have we clicked on BTC already? Are we on the chart now of BTC USD?
Yes, sir, on the chart.
On the chart of BTC USD, right?
Yes, sir.
So now, yeah, I'm coming. There's no BTC on my own. Aisha, there should be BTC on your own now. Although this thing too, you can just check online later. You understand? And you'll be able to you can check online later how to enter a trade. Understand? So that for more, hold on, I'm trying to send something to us. I'm with you. I'm still on the call. I'm sending something to the group. So opening of a trade or entering of a trade is not something that is difficult. So this is my own MT5. I've sent something to the group now. I want us to check. So Aisha Alpha, have you seen your own? Have you seen BTC on your own? Just type it above BTC USD. Is Aisha still on the call? Alright, so I'm coming. I think I just sent something. Okay, so this is my own BTC USD. I want us to come to the chart like this. Are we on the chart like this?
Yes.
Just one person.
Yes, sir. Yes, sir.
Okay. So now you can see that we have this thing here. This place here, we have the lot size. So you should have your lot size here at this place. Maybe 0.01, 0.1, 0.5, 1.0. Then you can have your time frame here. You can change this time frame here to 15 minutes. You can change it to 15 minutes, 30 minutes, 1 hour, whichever one. But if you're on the chart now like this and you want to enter a trade, you can see that we have sell here and we have buy here. So it's very simple. Just change your lot size here, enter your sell here or enter your buy here, and it's going to appear. Understand? So now this lot size here, I want us to change it to 0.01. Let's change this lot size here to 0.01. Let's do that now. It's done, Abi. 0.01. Okay. Okay. So now, from this Bitcoin now, are we buying or selling? Okay. Because we are just doing it for practice. Let's just enter a sell. Is it sell? Okay. Just click on sell. Wow. Please, what time frame do you have? All of you that have opened it. 15 minutes. Okay. The time frame does not even matter. Just click on the sell. Have you clicked on it? Everybody.
Yes.
So you should have a running trade now. So click on open another position again, making 2 positions. Click on the sell again. So you have 2 running positions. You should have 2 running positions now. 0.01, 0.01. So you might want to set your stop loss and your take profits. But that one will not happen in this class. You can go and check online how to enter all these things. It's very simple. You will see them on YouTube. I'm exhausted already. You understand? So now I'm going to be taking questions from what you have done so far, and any other question you have. Maybe I'll just take 5 questions. So who is going first? Okay, this is what I'm going to advise you all. What we have taught, I've taught you from Saturday and Friday till date. Go through it. So it is a foundation for you to start building up. Understand? But let me take your questions first. Anybody who is going first, if you have a question, raise up your hand so that I can call you. Just raise your hand. Oh yeah, Samuel Indukwe, fast. Unmute yourself and talk.
I just want to ask you,
You can't hear you, speak up.
how do we know the currency to trade on? Or is it something we pick randomly?
Okay, fantastic question. So when it comes to currency to trade, you are the one that will pick it yourself. Understand? So and it depends on, maybe if you have somebody that is mentoring you. Most times the person, it is the currency that one is trading to that will introduce to you, that you start trading. So with time, once you now start learning, you might now want to look at other currencies. Then you will now choose the one you want to be using going forward. But most times, it is probably when you are under someone that is training you, that it is the currency pair that person is trading that we also introduce to you, that you will start with. Please mute your mic, Inemeka. Inemeka, mute your mic, please. That you will start with. And so, but with time, like me now, when I started learning, then the guy that I paid that was teaching me, it was GPP, it was even USD that we started with, and GPP USD. So later on, I was now learning too from Jeffrey Benson online. You understand? I was learning from him, and he was trading GPP USD. So I was now trading GPP USD like 1 year plus or something, or 2 years. Then before I now started trading other pairs. Like last year now, I started trading Euro JPY. Today now, I have a watch list of currency pairs that I trade. So these are my watch lists. Euro JPY, Euro USD, USD CHF, GPP USD. So the reason why I have the watch list is I don't want to just be trading one currency pair, because when I was trading just one currency pair, there are times that I want to trade in a day and the currency pair I want to trade is not giving me any setup. So are you not saying that I will just allow that day to go? But if I have like 3 or 4 or 5, if I'm not seeing setup on the first one, I can go to the second one. If I'm not seeing on the second one, I can go to the third one. If I'm not seeing on the third one, I can go to the fourth one. So when it comes to choosing a currency pair, with time you will know the currency pair that you want to be trading. So have I answered your question? All right. Obaga Emeka, please go ahead. Ask your question.
Alright, thank you very much, Chief Lekon. Like I call you boss. Okay, my question will be the first one is how do you set get the proper setup? That's one. The second one is how do you pick a good entry point? I know the questions might be somehow. I've been following you, so I've been looking at a lot of things you do. Just that sometimes it has been confusing, so it's getting clearer. Then the third question is this higher lower high or higher lower, is it the same thing with support and resistance? Did you get my three questions?
Okay. The first question, the second question is how do you get a proper setup?
Yes, sir.
The third one, the higher high and higher low, is the same thing as support and resistance.
Yes, sir.
Then the first one is what?
Sorry. The first one is how do you get the proper
Setup.
entry point? Entry point is the other question.
All right. Thank you.
Is it the same percentage?
All right. Nice one. So I'll start from the third one. So support and resistance is the same thing as higher high and higher low. Yes. Yes, because when you have what's it called now? Let me go to the chart. Which example did we use then? NZD USD. Abi? 1 hour. Okay, the market is open already. You can see this was what I was trying to show you. Can you all see the horizontal line here? 1, 2, 3. Like these lines, this horizontal line. So the market is open already. Okay, you can see. When I was explaining the spread. So now your questions. This is higher high, higher low. Let me remove this. So higher high, higher low, higher high, higher low. So now this higher low now is stop here. Then it started going up. So this higher low can also be your what? Your support. Because you can take your buy from here. So higher low is your support. Higher high, there's a rejection of price is coming down. So from higher high now you want to sell. So higher high too can also be your resistance. So support and resistance. So this one is support, resistance, support, resistance. So it's the same thing. Higher high, higher low, same thing. Then how to get a good entry? That one is an advanced question. That one will take it will take me time to explain that one. Understand how to get a good. So because there are some things you look out for. Like me now, if I want to take a trade now, there are some things I look out for. There are some criteria I use to enter my trade. I trade liquidity. I look out for sweep of liquidity. I look out for candlestick pattern. Understand? Most especially liquidity. Then I look out for candlestick pattern. Candlestick pattern, liquidity. Those are the criteria I look out for before I take my trade. Understand? Candlestick pattern and liquidity. Because liquidity validates the zone. What price is always doing is that price will come, create liquidity, and come to grab it, then move. Create liquidity, come back, grab it, and move. Price will create liquidity, come back, grab it, and move. That's what price does. So wherever there's liquidity, that's where price will go. Liquidity is where there's money in the market. So my entry point, what's it called now? So what I look out for before I choose my entry point, I look out for liquidity. I look out for what's it called now? change candlestick pattern, liquidity and candlestick pattern. Those are the things I look out for. Then the third question you ask, how do you get a proper setup? Well, it takes experience. That's why when you start, if you start trading Forex now and you now stop, you're not coming back after 1 year or 2 years, you are cut off. You are cut off. Please mute your mic. Please mute your mic. Once you start trading Forex, that's why I encourage people, once you start, don't stop. Because you start Forex, you now stop. You now come back after 2 years or 3 years. You are different. You will be the same. You can't have the same result as somebody that you people started together and they didn't stop. Even if they are not profitable yet, the experience they would have gotten, you can never get that experience. So there's an experience you get when you are on the chart, when you are trading, when you are still consistent. Just like somebody that is playing ball now, people that play football. You are playing football, you are fit. And somebody that has injury that couldn't play for 1 year. Both of them cannot be the same. It is not possible. So, for you to get to your entry point, it is with consistency. Make sure you don't stop trading. Just continue. Even if it's not making sense. What people do most times that they get discouraged. You understand? And once they get discouraged, and most people have options. They have their 9 to 5. They have people giving them money. Or they'll just go and learn something else. But you understand? They'll give, once they have options like that, you go out. So, but you, even if you have option, have it in mind that you don't have option, and tell yourself that it is this thing you want to do. You understand? So, but when you now leave it and you are not consistent, no, it's just like somebody now. You read your Bible every day, you pray every day, and there's somebody that prays once in a week and read the Bible once in a week or once in a month. Both of you can never get the same result. It's not possible. So that's it. Have I answered your question?
Thank you very much, boss.
Alright, Dominic. Let me have it. Dominic, we have less than 9 minutes.
Alright, thank you, sir. I would like to know how can we set our SL and TP?
Alright. Is that the only question you have?
For now, yes.
Okay. Alright, thank you. So, you just go on Google and you just check, okay, let me even do that here now. Because it's going to take time for me to do that for you people now. How to set TP and SL. Can you see? So I've clicked it now. So you can see what it brought. So you can just come to video on Google. Just type it on your Google. Then you can see how to set it. Now Jeffrey Benson has even done the video on it. So there are different people that have done the video. So you can click on any one of them and just watch it. So just follow the step. You are good. Alright. Emeka, you still want to ask another question? Any other question? Alright. Alright. So I think we have come to the end of it.
Okay, thank you. I think I tried doing that TP and SL. I've screenshot and sent you.
Okay, you tried setting it.
Yes, I actually got it.
Alright.
Maybe it's the calculation I don't really get, but I'm just trying something with it.
So there are okay. So there are some stuff that if you need questions on it, just go on YouTube. A lot of traders have done video on it. So just follow the step and you will get it. Alright, so this is going to be my word of encouragement or my final words to all of you. Okay, the ebook material you promised us. Don't worry, just calm. Do the calms. And Richard. So my advice to you is that please, this is the foundation for you. Start building up on it. Now, even if I give you the book, they are just theoretical stuff. You still need to do the practical. And you need guidance. So you can either go online and be checking videos of forex traders that have done videos on Forex, you can learn from there, or you can get somebody to teach you. That one will be faster. Mentorship, we make it faster for you than you going online to learn, because if you go online, you'll just be learning from different people and it will take time. You might even get some wrong information, you understand? So whichever one you want to do, the ball is in your court, you understand? But mentorship is going to be faster. Or you can also, if you don't have money to pay for mentorship, you can decide to go online and start. But just make sure that you start your Forex journey from here. You understand? So you start your Forex, and if you have questions on trade and life like that, just go on YouTube, type it, this and this. In fact, there are a lot of videos, a lot of topics that you see on YouTube. You understand? So you can do that. But I would advise you that please don't stop trading. Just continue. Just continue trading. Continue trading. And also, I'm thinking of adding people to my Telegram channel. I'm still thinking of it. By tomorrow, I'll reach out. Then the book. If you need the book, just send me a DM that you need the book. I'm going to send it to you. I'll send the book to you so you can go through it also. Then I think I'll also add people to the Telegram channel. Understand? But just that the Telegram channel is for people that are trading already. Understand? Because I want us to have a community where we can be interacting, we can be talking. Because as the farmer said, that you can't grow alone. You need a community of people to grow. Alright. So in the absence of no other question, Ajayi Martins, what's your question? I can't see your question. It's loading. Network. Hey. Okay, can you hear me?
Yeah, okay, yes, sir.
Can I hear you, sir?
Okay, it was the network. Okay, Ajayi Martins was asking a question. Can you ask your question again? I didn't see that.
He said the thing between buy and sell, what is it called?
The what?
That's what he used. I wanted to ask the thing between buy and sell point. What is it meant for?
I didn't get that question. The what? The thing or what?
Yes, he said the thing between buy and sell. Maybe he can come and ask himself. Maybe.
Okay, no wala, so that we don't waste. So we have so I think we are done for today. Alright. So what's it called now? So you can send me your messages, like your testimonial. You understand? You can send it to my DM. You know, just like a testimonial of what you have gained so far or something. Or I don't know the way you want to do that. Just send it to my DM, you understand? And I'm going to send you the book. But like I said, you can send it to me. If you need the book, just let me know. Understand? So this is where we are going to end the class. Alright, good night everybody. And if you need any other thing, you can chat me up. Good night.